I always viewed it from an opportunistic perspective, or as my friend George Karras likes to say, crisis-tuity. There's opportunities in every crisis, and I think that's very true for real estate. You can't paint a brush on broad statement sentiment on real estate. You actually have to delve into asset by asset class comparisons and opportunities. So high level, I would say there's a few things that are giving us optimism. One, transaction volumes globally potentially have bottomed out when you compare transaction volumes in the last few years, and perhaps that's a sign of money sitting on the sideline, ready to come in. And in fact, our respondents have told us that capital seems to be ready to be deployed in various asset classes, relative to last year being more undersupplied, both on the equity and debt side. And then we also look to spreads between bond rates and cap rates. They seem to be widening, so that's indicative of potentially more money moving into real estate rather than sitting in risk-free returns. And then overall interest rate movement, very helpful in the last year. Interest rates, certainly at the Bank of Canada, going from 5 to 2.75, and hopefully, I think there was an announcement yesterday, potentially the benchmark is going to hit 2.25 by the end of the year. So I think that's very helpful. So those are positive indicators to real estate. So we look at that in terms of forming strategy, so that you can then use that to decide where you want to be in the next 5 years, because real estate is long term, right?